And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning. Welcome to the market forecast for Wednesday, December the 15th. I'm John Hoagland. As always, thanks for trusting me with your time. We've got a data-driven day today. As always, we're seeking good context, good risk management, and infinite patience. If you're in the markets already, hopefully things are going your way. We've got a lot of information due out, a lot of perhaps hurry up and wait as the day goes on and we get closer and closer to that FOMC announcement. Already out this morning, retail sales edged up just a little bit. Empire State Manufacturing came out a little higher than they were expecting, and then import-export also out this morning. We are still waiting, 9 o'clock central numbers, business inventories and the housing market index, EIA petroleum status report at 9:30 central time, and then the day we've all been waiting for, the moment we've all been waiting for, the FOMC announcement at 1 o'clock central, and at 1:30 the FOMC, the Fed chair presser. U.S. stocks are pretty much flat awaiting all this information, the least of which, of course, is that FOMC announcement. Investors pondering the Fed's plans amid 39-year high inflation. Crude prices remain a little bit under pressure this morning as demand seems to be slowing and global stocks tip into surplus. The API announced a smaller drop in expected inventory last night. They were looking for a drop of 2.6 million barrels. The drop is 800,000 barrels. The EIA is looking for a 2 million barrel drop today. We're going to have to wait and see how that plays out. As always, make sure you hit the lucky like button. Share, comment, question, feedback, and heckling are always welcome. Make sure you say good morning. And subscribe to our YouTube channel so you can get notifications when we do go live. The fun coach's playbook yesterday, and looking at our estimates as to what some of these markets were going to end up this year, and put some estimates into what we're thinking for next year. That's always a fun one. As far as VIX, the dollar index, and the 10-year yield, VIX pretty much flat, 21.90, as we would probably expect, as the equities are pretty much flat. Dollar index is a little bit lower, 96.51, and the 10-year yield steady, still at 1.44%. Got to say good morning to everybody. I saw my brother's first one in the room. Rick, you win the prize. I may have to come up there and give you a hug. Chris, good morning. Charles, Adam. Yeah, Chris, welcome to Fedness Day. Yeah, it certainly is. Christo, good to see you. Name I'm not sure that I've seen before. Welcome to the market forecast, and thanks for checking in. Brian, Trading Research, good day, sunshine to you as well. Terry, good morning. Jamie, Zerain, Mirik, George, Isaac, Deanna, good to see you. As always, Jamie, thumbs up, everybody. I appreciate that. Mo, Andre, Jim, good morning. Crazy weather here this morning in Leadwood Springs. Yeah, I guess you're getting a little bit of snow. Good morning, Ron. Frederico, Chris, Ryan, Sarah, good morning. Wow, I like that little picture of the dawn there, Sarah. That's pretty. Robert, good morning. Dr. VJ, Vince, good morning. Johnny, Manuel, and Alfred Santoro. So we know that Dan signed off for the rest of the year on the recap. I'm going to be doing the recap for him today, but tomorrow is going to actually be the last market forecast, and no more recaps for the rest of the year. Tomorrow is going to be it. I was going to try and throw some sort of a holiday party, but we was going to do that on Friday, but unfortunately I'm not going to be able to be here. So tomorrow is going to be it. I am going to miss you. I'm going to miss the markets a little bit, but as we always say, it's important to take a little bit of time away, and sometimes we get so involved in the markets, it's difficult to see clearly, and I find that this time of year is a good time to do so. Spend some time with friends and family, and have a peaceful holiday season. My activities are pretty much done for the year, so I'm going to take a little bit of time. We suggest you do the same. Jay, good morning. Rob, Kevin, Will, Jim, lots of snow and wind in Glenwood Springs, Colorado. Well, just hunker in, stay down in the house, have a nice hot cup of coffee. I'm sure you've got a nice pile of firewood. Just sit back and chill and wait for the fireworks this afternoon. Again, FOMC, 1 o'clock. It's going to be interesting we're not expecting any change in rates this time, but I think it's going to be more about the verbiage and what the Fed chair talks about at 1:30 is, he has pretty much said that this inflation we're in is not going anywhere for a while. So what are they going to do about it? Of course, we know that they're moving plans closer to ending bond buybacks, and we may see change in rates sooner than later. Hey, Mustafa from Morocco, good to see you. Three Lions, Ricardo, as always, good to see everybody. All right, so let's get set up here so that we don't have a echo event, and let's take a look and see what we're looking at in these equities. Crude oil, gold, all of our usuals. Very narrow range last night in the S&Ps. Let's go ahead and take a look. There's the daily. Go figure. Go figure. I don't want the echo, and I don't even turn on the mic. There we go. So now we're cooking. So pretty much weekly kickoff high to weekly kickoff low in the last 2 days, much closer in the NASDAQ. We'll see that shortly. And it's kind of funny. We're talking about what the weekly kickoff levels are and what they mean. And they're not meant to kind of envelop a weekly range or anything, and that's exactly what so far has seemed to happen with relative accuracy in the S&Ps this week. It always happens when I say something's not going to happen, it happens. So yesterday we had a pretty deep pullback, pretty good rejection off that low. Look at last night, very narrow range. Very centrally located inside weekly kickoff high and low. That tiny little range inside extended trading hours. You think we're waiting for new information? We added 63,000 in open interest. Again, that's rollover related. Monday morning, when you check the open interest, we're going to lose about 500,000 of it, and it's just a function of rollover. Don't think that the contract is coming to an end. It's just one of the things that rollover does. It increases open interest and then expiration. We usually end up with about 500,000 expiring and settling in cash. So we know we're looking for information. We're waiting for more data. Look at what happened yesterday. We closed the gap from the way up. Now we've left a gap. Did we put an island top up here? Entirely possible. But last night, looking at just what happened last night, we stuck pretty close to settlement. Settlement's 46.28. Very little activity outside of it. There's no overnight inventory, no gaps, no runs, no hits, no errors, nobody left on base. We're just hanging around waiting for information. I'm going to be very, very patient today if I do anything before the FOMC meeting, and I'm probably not going to be responding to the FOMC meeting too, because I've taken enough positions into some pretty serious numbers, and I've had some pretty big days, and I've had some really bad days. If I add them all up, I'm about even. So I choose not to play. It just creates more gray hair and makes a lot of my hair fall out, and I don't have that much left, so I don't want to do that. So I'm not going to do anything right away. I mean, we're right at point of control. We are right at settlement. We are in the middle of the value area from yesterday. No change in the perception of value. That could change with some of the information that we do have. Coming out here at 9 o'clock, business inventories, housing market index. They're probably not going to be all that impactful, especially knowing what we've got going down the pipe. So my suggestion for the S&P is hurry up and wait. Hurry up and wait. Don't do much. There's no reason that I see to be involved in this market early in the session. Let's take a look here. Back to the daily. We broke out of an area of balance yesterday. You know, the rule is we go with a breakout from balance. Well, if we were able to do that yesterday and, you know, and catch this low here, it was a nice opportunity for us. Just kind of waiting and waiting and waiting. Let's check the NASDAQ. Look at how, let's see, what was the high the day before yesterday? 16,413, weekly kickoff high, 16,420, within 7 points of weekly kickoff high. Yesterday, the low, 15,734, weekly kickoff low, 15,730. All of these levels are definitely considered ranges instead of finite numbers. If you had the opportunity to look for a long down there and you got it, you were pretty handsomely rewarded as the day went on. Where are we? Well, similar to the S&Ps, we've got very narrow range yesterday. We are sitting and waiting, not as centrally located between weekly kickoff high and weekly kickoff low as the S&Ps, but still we're looking at the market in a state of waiting. Weekly kickoff high to weekly kickoff low. Who'd have thunk it? Who'd have thunk it? Remember, this is going to be a data-driven day. We're still awaiting most of that data that's going to happen later on. Inside extended trading hours, teeny little range, a little bit different. The market settled outside of value. We had a bigger pullback off that low yesterday than we did in the S&P. Settlements all the way up here at 15,922 and a quarter. Do we have any overnight inventory? No, the market has stayed very close to the settlement price down here. The volume point of control is considerably lower. Most of the volume yesterday, in that case, did occur down here near the lows, but we did leave that and we came back up and settled pretty well. No overnight inventory, no gaps, no runs, no hits, no errors, nobody left. We're waiting. We are waiting. We closed up some of the gap that we had on the upside. Now we're still holding a gap here. Island top. Maybe not, maybe. Let's check the crude oil now. We can see the open. We're just about finished with that first minute here. Last day for January. Tomorrow we'll be looking at the February contract. Fundamentals have been pressing the low end of the rollover range here for a couple of sessions now. EIA expecting a drop of 2 million barrels. Keep your eye at 9:30 to see if there's any changes in that. We lost 5,600 in open interest yesterday. Again, potentially a function of rollover. Here's the 30-minute chart. We've broken out of that range that we were in. So the idea is to go with the breakout of that range. But look, when we look at where this market came back to and settled, this is kind of that resistance area that we would be looking at. Now, we've got a whole bunch of overnight shorts in this market. If we don't see the market continue to push to the downside at some point, we may see an overnight inventory that could push price back to settlement, back to the low end of the range that we've been in, which may offer an opportunity for resistance. What's the first minute look like? We've got a relatively large first minute, 30, 20, 28, 29 ticks. We just looked above it. If you've stopped into it, you're in for a little bit of a risky opportunity here, but the opening range is left at the low of the session when we've got a lot of overnight inventory that's holding shorts. Those shorts may start to get out en masse and push price considerably higher. If that is the case. I mean, we're looking at a potential 40 tick move, but the risk is kind of large. 28 ticks, so I'm not really sure if we were going to just take price back to settlement, which by the way is 73. Is it worth that much risk for that much reward? Debatable. Here we are on the 30. We're opening basically overnight inventory to the short side. No gaps, no runs, no hits, no errors. Coming back into value. Stay patient. We've got more information coming out for you. It's 9:30 EIA Petroleum Status Report. All right. So we've taken a look at the equities. Let's take a look at gold. The weekly kickoff low in play. 1770, that level. It's going to be somewhat pivotal today. Remember what the weekly kickoff levels are about. They are about seeing if longer time frame traders adjust inventory. Yesterday, they decided not to, and you could see it in open interest. There was virtually no change in open interest on this push to the downside. No change in open interest up against an important inflection level. No major changes in open interest. Nobody cared that the market came down here. But again, I think that 1770 level is going to be pivotal. Data-driven day today, of course. We all have to be aware of that. So whatever you do, make sure you protect yourself. Use a stop. Always wear a stop. So here we are. We're at the weekly kickoff low. We are at last week's low. We've opened. We've kind of held above 1770 weekly kickoff level. We don't really have any overnight inventory left. So what we're looking for is new business. We are looking for longer time frame traders to take charge in this market. We've been waiting for the longer time frame traders to take charge in this market. Yeah, that's right, Rick. I did see that this morning. I forgot to mention that. The House voted to raise the debt ceiling. Now it's going on to the president's desk. Thank you for pointing that out. That's right. TS. Crude traders have to be flat for EIA petroleum status report at 9:30 Central Time today. Everybody has to be flat for the FOMC announcement at 1 o'clock if you are in step 2 or in a funded account. Right. Back to the charts here. So, I'm looking at this 1770 as a support level. The market did look down below it, but rejected it by the end of the session yesterday. Really quick look down there and a pretty swift rejection. Last night we looked at it again, and it seems as though our traders so far today are rejecting that as well. So 1770 right now, it's a long above, short below, but be careful. If the longer time frame does not begin to enter into the marketplace at this level, it can be very sticky, and we can end up getting ourselves chopped up by going long above and short below. So I'm going to give this one shot. If it doesn't hold, we don't move price higher, I'm probably not going to be playing with it today. Just about out of it anyway. Just about done with the year anyways. Last thing I want to do is create a loss. So, gold is open. The opening range is, relatively close to the important inflection level here. As long as we hold it, I'm going to stick with it. If it doesn't work, it's going to be a small loss, and I'll move on from that. That's one of the things about trading is we all have losses. We all have winning trades. We all have losing trades. And we have to accept that. There's no perfection in futures trading. I've never had or known anybody who was so good at this that they never took a loss. It's just something that we have to learn to accept. And it's never a personal affront on us. So much of us take our P&Ls and take our performance in futures trading as a statement of who we are, and nothing could be further from the truth. We are all good, beautiful people, and we have to remember that, especially on those tough days. Dad always used to say, the hardest steel comes from the hottest forge. Got to tough these things out. All right, here's the euro. 2 weeks now, at least, in range. We had a bull flag that had offered a really good opportunity, but a one-time opportunity. We did not find continuation in this bull flag breaking out. Are we creating another one? Is this a bull flag next to a bull flag? I don't know if I'm ready for that. So we are range bound. Last week's high and low I'm viewing as the extremes for the opportunities for today. Take a look at the 30-minute chart. Okay, so pretty decent down day yesterday, but still kept us largely in range. We are putting in lower highs and, whoops, I hate it when that happens. I'm just going to leave that there. It's as close as I can get. And hang on. So, and we are putting in lower lows, but that's what we did here, and we broke out to the upside with a pretty substantial move. Well, now the moves are upside both ways, downside. What's next? Well, we are in range. We are in value. Settlement 112.83.5 ticks. We are holding perhaps some overnight longs here. But again, we are in range and we are in value. Do you think that there's the possibility that if we can get above this high volume node, that there's a repair up to this high volume node? Very little activity, very little volume here. The market may decide it needs to go and see if there's anything left to do up there. If not, then I'll look at overnight low as a potential opportunity for an execution. Settlements down there. The overnight low is right there. The low of value and the low of the range from yesterday is all right down in there in that area. We may find that there's a little bit of a concentration of fish in that area. But again, It's very news driven today. Very news driven. Stay patient. We are, after all, in range and in value in the euro. Here's the 10-year. They're treading lightly here as we get closer to FOMC, as I'm sure most of the treasuries are. Price, where is it? Very central in balance. Last week's high, last week's low, we're right in the middle of it. Our tennis player is awaiting the next volley. The auctioneer is certainly pandering. We've got an inside extended trading hour range. Take a look at the 30-minute. No overnight inventory. No gaps, no runs, no hits, no errors, nobody left. You know, a little bit of a push to the downside here, but value low. One tick below it, we've got a kind of a weak low here. This I find a little bit interesting, but I gotta say, I'm going to try and stay patient. I'm thinking better trade locations are coming as the day goes on because this market opened in value and in range and remains largely in value and largely in range. My new favorite market, natural gas. So here's the daily. Lost open interest. Do you think we shook out some of the longs? We lost 5,900 in open interest. Volume was also lower on that push to the downside. So I think that we ended up with just a few too many longs from Monday's attempt to close the gap here. We got pushed back. We pushed lower. We're still in range. We're still inside the extremes, weekly kickoff high and low, last week's high and low. So it just looks like we just had to knock out some longs before we were able to kind of loosen this market up and see what the next direction is going to be, if that makes sense. Here's the nat gas. So nat gas settlement $3.74.7. Got some overnight longs in this market. Finally, we've got a market that is opening with a gap, which might be pushing us into an earlier opportunity. We got an awful lot of longs in this market. And if you remember yesterday, we talked about the idea that if we truly accepted back inside of the value area from the previous day, there may be some repair in there. And repair is, we've got a very toothy profile. It was an emotional move when we could not hold that $4 weekly kickoff high. Just everybody just acted in concert and pushed this market lower. And again, it's a very toothy profile. We've got lots of high volume notes, low volume notes, high volume notes. This kind of brings us back up here to say, we left a mess up here. Let's see if we can't clean that up. And here we are. We're back up in that area. We've got a gap. If we can't close the gap relatively early, we are looking for opportunities to trade in the direction of the gap. This is a relatively substantial gap. So I think the probabilities of it actually closing are smaller. But again, we have to be cautious. We have to look for good trade location in the current texture or context, if you will. And it's going to be difficult to find. It's going to be difficult to find that because of the inherent freakiness of the day yesterday. Now, we just put in a high here at a high volume node. That makes sense to me. Where is the next high volume node where we may find some support? We might be at it right now. But again, where is the risk? Where is the risk I have to take to get into this trade? And what's the potential profit target? It's unknown, of course. And we've already tested up to the high volume node here. So I'm going to be patient. I'm going to be looking for better trade location than this high volume node here. Maybe it's back down, closer to these highs here. Again, potential profit worth the risk. I'm always hawking for cheap trades. Cheap trades. Don't see one here right now. All right. Okay. Hey, I did it. No echo today. All right. Okay, so Ryan, out of interest, what time do folks take lunch over in the U.S.? When would it be a good time to come back after lunch? Well, Ryan, in New York, it's noon, 11 o'clock Central Time. So I think about 11 o'clock Central Time to 1 o'clock Central Time is, and you can see it in a lot of the volume bars at the bottoms of the chart. These seems to be the lowest participation, and you're going to see more participation, more volume on the open in that first hour and a half, 2 hours, in the last hour or two in any market that you're looking at. Where do we find the news that we have to be flat for? So let me bring this up, and I'll send you a link so that you can save it. Here we go. So there is the link on the website that tells you which releases you have to be flat for in step 2 or in the funded accounts. And it's, by product. So, if you're not trading crude, you don't have to worry about the EIA Petroleum Status Report today. But if you're trading anything today as the FOMC statement is all products. So, and there's also a calendar that posts the products that you have to be flat for. Core retail sales are red. Good eye. JB, good morning. Ryan, I know it's going to be at Christmas, but I would like to contact you via email to possibly get a little help for the holidays. Give me some work to do, or would the new year be better? Well, probably the new year would be better, Ryan, but one of the things that I usually tell people, if you have not read Mind Over Markets, check it out. I think it's a very clear way to view markets in the auction process. So it's by James Dalton. It's called Mind Over Markets. I say it's a clear way to look at markets, but it isn't edited all that well. It's kind of a hard to read book, but by the time you get through that first 100 pages, I think you'll have a bit of a new lens with which to look at the markets, and I will look forward to having a conversation after the first of the year. I'm going to really try and step away and do some personal reading and take care of some things on my end. And we are going to be having the futures classes that I did I think it was in September and October. We're going to be kind of doing them, improving some things that were suggested we needed to add. And we're calling them Top Step Trading Foundations because it's really the basics of trading. There's a lot more deeper information that we can put together, and we're going to start to do that over time. But it's a great way to kind of get a look at and think about, what the markets and how to look at markets, and or at least how I look at markets. And there's a million ways to look at markets, and I just look at them as never-ending auction processes that occur in infinite time frames. I know that's a mouthful to say, but what our job really is, Ryan, is to understand, number one, when the longer time frame is likely to be involved in the marketplace, or if they are involved in the marketplace, and how our direct competitors are relating to them. It's almost like we're trying to pit time frame versus time frame. If the longer time frame is involved in buying, they're not buying from other longer time frame traders. They're buying from shorter time frame pea shooters like me. So if that's the case, then eventually those short time frame pea shooters that are selling into this stronger buying are going to end up way too short, and those situations are where we see the powerful moves, sometimes late in the day, monitoring open interest and monitoring volume, and monitoring the auction process from that lens can give you indications that, okay, this the market is moving higher. We see that it's moving higher. How good of a job is the auction process doing in the move to the upside when you see volume starting to fall off, or open interest starting to fall off, or delta divergences that are saying something else? These are things we want to pay attention to, and we're going to have to adjust our hypotheses. If a market's moving higher over time, but volume starts to drop off and open interest starts to fall off, that auction to the upside is now starting to look a little bit tired, and we may start to look to sell strength in that market instead of consistently trying to buy weakness. It's all in the ability to recognize the health of the auction process, whether that auction is to the upside or to the downside, doesn't matter. If that open interest and volume start to fall off in sometimes gentle but recognizable ways, that's telling you something. So, yeah, I will look forward to hearing from you after the first of the year, and definitely check out that book. I suggest that for everybody. There's a million ways to skin a cat, and not every lens, not everything works for everybody. But I think having a really good basic knowledge of the auction process isn't going to hurt you. That's a great book, Trading in the Zone by Mark Douglas. Mark's other book is also excellent. It's called The Disciplined Trader. The Disciplined Trader. And then Dalton has another book. It's called Markets in Profile. So you've got some substantial reading, and none of these books are easy reads. It's not like reading a suspense novel. They're textbooks. There's a lot to know and a lot to read in them. Nat gas pit times 8:30 Central to 3 o'clock or 3:15 Central. George, you bet. Then all of the equities have that same pit time. Crude oil, 8 a.m. Central to 1:30 p.m. Central. Gold, currencies, and treasuries all open at 7:20, but they have different closing times. The currencies and the treasuries close at 2 o'clock. Gold, 12:30 Central times. Those are all Central times. All right. Got about 5 minutes here. I'm going to run down to the proverbial trading pit. I'll see you there. Trade well today. You'll see me for the recap today, and then again tomorrow for the market forecast. And that's going to be it. So trade well today. Be patient. Stay out of trouble. Always wear a stop. And we'll see you tomorrow. We'll see you this afternoon. Oh, one more thing. Today is Wednesday. We are going to be having group coaching. Let me put that link in real quick here. And it'll start probably around 1:05 because of the FOMC meeting. I want to give everybody a chance to see the fireworks and go, ooh, ah, and then we'll get back down to business and group coaching. So I'll look forward to seeing you there. So group coaching and a recap and tomorrow. Trade well. Have a great day. Get out there and profit.